Hello, ladies and gentlemen. My name is Greg Michaelowski with ForexLive.com. It's an unusual period for me to be working, but Eamon has his session off. I think he's going to help out in the London session for Justin. So you have me, and I thought I'd do a quick look at the technicals that are driving the Forex market as we head into the new trading day, as we head into Friday this week. So let's take a look at start by taking a look at the Euro versus US dollar, see what the price action is telling us. And if we look at the Euro versus US dollar trading action this week, this is the hourly chart. And what I really love about this week's trading is that the move to the downside here, we're stalled right against the 200-hour moving average. That was a nice key hold. Price basically came right down to the level and saw buyers enter the market and push the price back to the upside. Now, the stall that we saw in trading on Wednesday's trade saw the price move up to a swing area through here, where we had a number of different swing lows and swing highs through here, and we returned back to that level in Wednesday's trade and rotated back to the downside. The move back to the downside also came into another key area, which I had earmarked in my weekend Forex report, if you listen to that, and that was this area right here where we had the November highs. Those high prices came right here and right here, and you can see there are a number of different lows here that came in on Wednesday and again yesterday in the the session yesterday, where the price came down into that area, found support buyers. So we stayed above the November highs, even though we moved below it here and tested the 200. We came in and stayed above those levels, which was a significant bounce as well. So two significant bounces, once off the 200 and then off the support levels from the November highs through here. And the market moved above its 100-hour moving average. That's a blue line in the chart. And we are trading above that level and trying to make a run toward the high price that we saw on trading on, I guess that was Monday's trade. So that level comes in at 1.0594. A close support level would be this area right through here, where we had swing highs through here. This is the level where the market broke to the downside here, and then came up and tested that level here. So staying above this 105.43 to 105.49 level is really going to be the really close. We're right near it, but we do have about 10 pips or so of wiggle room to, if the market should find support buyers against this level, we have the potential to move to the upside. Ultimately, however, if the price can stay above the 100-hour moving average and above the November highs through this yellow area right here, I think that would keep the buyers more in control here for the Euro versus US dollar and give the upside the benefit of the doubt and the barometer leading in that direction. So be aware of that. If we take a look at the daily chart for the Euro versus US dollar, the other thing that's of significance here is we're above the 50% midpoint of the move down from the high price that we saw right through here. This is the high for the year. This is the low for the year. And over the last few months, we've seen the price rebound higher in the Euro versus US dollar. So the dollar move lower, and we are above the 50% midpoint, which is somewhat significant as well in my book. We've been trading above and below it, so it's not necessarily locked in stone as the most key technical bias, but I do love trading above that level and the price above staying above that level. On the top side, the 106.15 to 106.40 level would be a next key target on the top side. That level corresponds with these levels through here, which happened in the months of going back to April and May and into June here. The last time the price peaked right here, market moved all the way down to the low, and we were trying to rebound back toward that area. So be aware and be prepared of that area. Let's take a look at the dollar versus yen. And in trading this week, we opened the week, or we closed the week a week ago below the 200-day moving average. That was the first close below the 200-day moving average, going all the way back to here. This was in September of 2021. So a long time ago. I'm sorry, that's not September. That's March 2021. So a long time that the price had not closed below the 200-day moving average. That should have led to lower levels, but it didn't. We saw a rebound in trading on Monday's trade, and we've seen some consolidation over the last 4 trading days in the dollar versus yen. And that consolidation has, this is that consolidation. That consolidation has taken the price in between currently the 100-hour moving average below and the 200-hour moving average above. That's the blue and green lines in the chart. 100-hour moving average here, 200-hour moving average here, and the price in trading on Thursday traded in between, mostly in between those levels. Did have some tries above here, above the 200-hour moving average that failed. But I like the fact that the market found support buyers against the 100-hour moving average here and is trying to push higher. Now, we do need to get above the 200-hour moving average. We need to get above the 50% retracement of last week's trading range. That's the high to the low. That low comes in 136.75 and 136.83. Get above that level, and that would increase the bullish bias here for the dollar versus yen. If we can't get above that level and we move back below the 100-hour moving average, that's going to be a negative bias here for the currency pair. So those are the risk-defining levels, and the market's trying to find its way, see if the market can break to the upside or break to the downside. On a move to the upside, we'd be looking toward this area right here, defined by swing levels through here before breaking to the downside. We returned to it earlier this week, but the market could not sustain momentum above that level. Had the opportunity to do that, couldn't do it. Hence the breakdown to the 100-hour moving average here. But if we get above this level and start to rotate above this 137.65 level, that would be more bullish for the dollar versus yen. Conversely, if we can't get above the 200-hour moving average and start to move below the 100-hour moving average, going to retest the 38.2% retracement, which was near the lows here, would open the door for further selling pressure. And traders would start to look toward the 100 or 200-day moving average. That's the green line right through here, where the price tried to move below in trading last week, but could not sustain the momentum and broke back to the upside right through here. So that would be the look for the dollar versus yen. Let's take a look at the Aussie versus US dollar next. And in trading this, what we know this week was the Reserve Bank of Australia raised their rates by 25 basis points early on Tuesday. And that the market through on Wednesday moved down and broke actually below the 100-day moving average. You can see the market tried to hold support against that 100-hour moving average here and here and here and here, and broke below it through here, but could not sustain the momentum on the break. So sellers had a shot that couldn't do anything. The market started to move back to the upside. The market price came back up to the 200-hour moving average. It's a green line here in this chart. On Wednesday's trade, rotated back to the downside, came back up to it again in trading yesterday, and finally broke above both the 100 and 200-hour moving averages right here and stayed above that level. So it tilted the bias back to the upside. Sellers are trying to keep control through here, couldn't do it. So the biases are returned back to the upside here for the Aussie versus US dollar. Now this area right through here, where we have a number of different swing levels, is going to be the level to break through if the buyers are to take control. And as you can see in trading yesterday, the market came up to that area and could not get above the level, this level defined by these swing levels through here. You can see how it was once resistance and then became support and then became resistance again here today, and then became here and then moved above it and became support and then broke below it here and now back to it here. So it's a point of reflection deflection that is of significance here for that currency pair. So if we get above that level, that would open the door for further upside momentum, and we'd be in this extreme area through here where the market formed its high through here. So that would be the target to get to and through up here near this 0.6782 level. Get above that level, that'd be more bullish here for the New Zealand, for the Aussie versus US dollar. On the downside, move back below the 100 and 200-hour moving average, and the bias shifts back in that direction. So battle going on, but the buyers are trying to take control in the currency pair. Let's finally take a look at the New Zealand versus US dollar. After all, is your session, and what we see in this currency pair this week is that the move to the downside that we saw through here came down, tested the 50% retracement of the last move higher. That's of this move up from this low right here to this high right here. The 50% retracement came in right through here and the price lows found support buyers again near that 0.62981 level on a number of different attempts through here to get to and through that level. Couldn't do it. Started to rotate to the upside. Admittedly, seeing some choppy moves to the upside, but what I like, or what gives a pair a little bit more of a bullish bias is the move above the 100-hour moving average, and that's what we're going to be watching on the new trading day. If the price can stay above that 100-hour moving average, things would be okay. If it moves below that level, then we're going to come and test this trend line here, which a few little spots along it. Yesterday we tried to come down and test that level in the late London morning session. Couldn't do it. Couldn't get below that level. Forced the price back up to the upside. So we'll be watching that level right through here, which comes in around the 0.63442-ish type area, somewhere around there, and moving higher for the New Zealand versus US dollar. So pay attention to that. So there you have a look at some of the major currency pairs, including the yen, the dollar yen, the New Zealand versus US dollar, and the Aussie versus US dollar. My name is Greg Michalowski. Good fortune through trading. Bye-bye now.